What's up, you guys? It's Rob here. Today we're going to be going over ticker symbol GME. And first, before we go over any of the analysis or anything like that, I got to get a message out to all the shills and bots in my comment section and blowing up my Twitter. I'm not freaking leaving. I'm not selling. I'm going to the moon with all the rest of these apes. So you can quit your shill activity. I'm not selling. I'm diamond handing this all the way to the moon and beyond. Not selling. If you guys can, do me a favor, hit that like button, hit that subscribe button, make sure that you ring that bell too. And if you happen to see any shields down in the comment section, feel free to blow them up because we're not leaving. This is our stock. We probably own the float. I don't want to say that we do own the float because I can't definitively say that, but we probably do own the float. So let's dive in here to the chart and take a look at ticker symbol GME. Now, when we take a look at the intraday, really, GME had a very bullish day until the shorts decided to come in and just flush the stock down the toilet. And we really saw the stock consolidate very nicely here around 186. We had some really nice consolidation in two different sections here. And I really like this. Like, this is textbook consolidation, textbook bullish consolidation within this trend. And you can see down here, it's confirmed on the MACD of how relaxed it is, how close it is hugging the equilibrium. That is a very good sign because it helps when we have very volatile moves like this lovely short attack that we had right here. Come on. That we had. And really, I know a lot of people say that I can't definitively say that this is a short attack, but why would we consolidate very bullishly twice around 186 and then all of a sudden get flushed all the way down to 176 within the period of 15 minutes, essentially? You can't tell me that hundreds of thousands of apes decided to paper hand the stock. Sure, maybe a few of them did, but I don't see a reason why hundreds of thousands of us would paper hand this. No, this is a short attack, and what the shorts are trying to do is make us panic sell because they're trying to stir our emotions. And so one thing you got to remember when you invest in the stock market, you can't let your emotions get the best of you because it might end up selling, and the next thing that you know, it rips back up. So just keep that in mind. We're going to see a lot of short attacks, and this was definitely a short attack that we saw here today. Like I said, can't say for certain, but it more than likely was. And really, textbook consolidation, we were very comfortable at 186. Why would all of a sudden we decide, no, let's go down to 176? We wouldn't decide that. And we really broke through two critical levels of support that we had here. We did a very nice job of running all the way up through 178, broke through that level of support, then broke through 184, tested 184, validated it as a good level of support, and consolidated at 186 for a decent period of the day. We had a decent period of the day up here above 184. Very good until the shorts decided to just flush us down the drain, and we closed at 180. Now, the huge thing is we are essentially within this 172 to 198 channel, and we're consolidating within this channel. It's exactly what I want to see. We're getting nice periods of consolidation, we're making moves, and we're just setting ourselves up for the next grand move that we're going to make. If we hop out here to the 5-day, 5-minute chart and really take a look at the stock, you can see that we sold all the way down to 164 here on the 19th, but we've really had this slow ascending level of support here, and we've done a very good job of respecting it, which is really good. If we hop out here to the 1 month, 1 hour time frame, you can really see I've drawn out two ascending levels of support here. One we'll look at on the day time frame, but really more recently we've been riding this ascending level of support, and then I drew essentially a descending level of resistance. It only has 2 touch points, so maybe we'll get a third and a fourth one here tomorrow to validate this descending level of resistance, because we definitely are riding an ascending level of support, and we definitely have a little bit of selling pressure, which is a descending level of resistance. We also have our 15-day moving average crossing over 60-day moving average. It happened on Friday, and today we got a good divergence of those two. Very good. Very good for the stock, very bullish momentum. And you can see down here, the MACD says that we're in bearish territory right now because the signal is above the MACD. Now, if you do take a look here, outside of our sell-off, we were definitely in very bullish territory, and we're not as overextended as we have been in the past when we've made moves up to 198, which is really good because it's dropping implied volatility down. Definitely a good thing for the stock. So if we hop out here to the year-to-date time frame, this is the one that I really want to focus on, is ever since really our post squeeze and then our run up to here to the 345, we've been riding an ascending level support, and then we have a descending level resistance, which is just creating this mother of all wedges. And really, when we take a look at this, we do have our 60-day moving average above our 15-day moving average, but we're hooking back up in a good general direction and headed back to making this converge, and then we'll have a divergence of the 15-day moving average being above the 60-day moving average, which textbook would put us in bullish territory. We do have a bullish confirmation here on the MACD, and it had the convergence here on the 14th, and then we had the divergence on the 17th. So this is a very good sign. So on a macroscopic level, we are in very bullish territory. Our RSI is sitting here at 56.99, which is incredibly good. We did only trade 4.6 million shares today, so our volume definitely is a little bit on the lacking side. But hey, if we could get our volume to step up to 8, maybe 9, 10, 10, my bad, not 1,000 million shares, we might see a nice push, and hopefully we can test that $200 level. Because if we do take a look at our options chain here for this week, when we take a look at $200, we have 3,927 calls currently out of the money. Definitely a significant amount of calls here at the $200 level. At 370, we have 4,115. It's not really realistic that we'll get there this week, but $200 it definitely is not out of the cards, guys. We got to keep that in mind. This stock can absolutely move, and we saw it move today and then have a really nice period of consolidation. Personally, I think we would have closed around 186 if the shorts didn't flush the stock down the toilet. Now let's go over here into Vortex and cover the short interest on Vortex. So our current short interest or free float is sitting at 20.69%. We saw a 0.6% change to the positive side. We saw 141,500 shares borrowed and we had a net borrowed change of 88,800 shares. Now keep in mind, Vortex only accounts for the things that are actually reported to them. So we know hedge funds have practiced a lot of malpractice in the past, and they probably still continue to do so. And Vortex is essentially saying, well, this is what was reported to us, so here's the information kind of thing. So this is absolutely the bare minimum situation when it comes to GME, in my personal opinion. This is absolutely the bare minimum. I would not be surprised if our short interest or free float is incredibly higher because of all the naked shorts, the synthetics, the failures to deliver, and all that kind of stuff. But really, to take a look at this, our shares on loan still increasing slightly. Our days to cover sitting at 2.79, which is actually pretty significant. So based off of our 2-week on loan average, it would take them 2.79 days to cover just their short position. No one else buying anything, no one else selling anything. That's a significant days to cover. And we're starting to see our utilization slowly creep back up. We're at 65%. The other day we were sitting around 63%. Cost to borrow sitting at 1.24. We saw our max cost to borrow be 3.91%, and our average cost to borrow is 1.77%. Personally, in my opinion, it's getting very hard for the shorts to hammer both of these stocks, AMC and GME. They're starting to spread themselves thin, which is, I personally think, the reason why we're starting to see a lot of shorts really kind of be calculated when they're taking these attacks on the stock and they're really pushing it at a certain period of time instead of trying to short it throughout the day. They're saying, okay, well, it's gotten too high. All right, now we need the short kind of thing. I think that's the way that they're moving. They're definitely moving in a more calculated manner versus kind of just shorting the whole entire stock in general. Now, if we take a look here, our current calls in the money, 7,624 at $200. We essentially almost double our calls. We have another 6,000 to put it in the money. So if we can get the $200 on Friday, that would be absolutely phenomenal. And I would absolutely love that because I'm still currently a bag holder on GME. My dollar cost average is around $249. So if you guys can, help out an ape. Let's get to the moon together, guys. But 300,000 shares available to borrow of GME. We have 37,387 short ETFs that are available to borrow. And the thing that I can do that I'm taking a look at here is we saw that there were short shares that were definitely borrowed and short ETFs that were borrowed. Now in Vortex, Vortex does not account for short ETFs. It only accounts for short interest of GME shares. Now this is key because we see that we had a 0.6% change. This isn't taking into effect the 2,000 shares that were shorted through ETFs. So keep that in mind. Now, if we do want to take a look down here, we don't have our trading data of our short percentage and our dark pool percentage. But really, when we take a look at the options chain, we have about 20,000 contracts out of the money right now. But the huge timeline that everyone seems to be putting their money on is currently the 16th of July. There's 85,084 contracts, pardon me, out of the money. So definitely a fair amount of contracts out of the money. We still have interest over multiple weeks of the stock, which is incredibly good to take a look at. Now, the huge thing that I'm noticing here is there's 383,196 puts expiring on the 16th of July. That is very significant. So it's definitely a time frame to take a look at here. And then on 1/21/2022, so essentially a leap, we have 254,685 puts currently expiring out of the money. So if we can get all these puts to expire out of the money, that would definitely be a very good thing for the stock because it would definitely put in very bullish territory. The stock overall is still in very bullish territory when we take a look at it on the chart. We're running a nice ascending level of support. We have a descending level of resistance that we are taking a look at here. And really, the thing that I'm going to be looking for is for us to make a breakout move and get up to $200 or get up above that 210. And hopefully we can start running with that. But we definitely do have the shorts being very calculated and seen when we're making very bullish moves and then just essentially flushing us down the toilet. So it's definitely something that we got to fight with. But I mean, we're still going to the moon, guys. Like, no matter what, I don't want to say that we're definitely going there, but I'm almost each day I become more and more certain that we are going to the moon because I become more convicted the more DDD, geez, I'm thinking about Captain DDD from Super Smash. But anyways, sorry, ADHD medicine's worn off, so my brain's all over the place now. But really, when it comes down to it, I still remain bullish. I am not selling. We're headed in the right direction, guys. Just hold on, strap on, make sure your boots are on tight so your socks don't get knocked off of you. So I'll see you guys in the next one. Peace.